Good day all Inderes TV viewers and listeners. In this video we are talking about Hennes&Mauritz as an investment with Analyst Rauli Juva. Rauli has written excellent extensive report about H&M. I put the link in the description below. I recommend to read the whole report. We just scratched the surface in this video. Rauli, first question. I think everyone knows H&M brand, but could you tell more about the business model and maybe also tell us a little about the other brands H&M has under its umbrella?
Yeah, well, H&M is like most, if not all, no, it's a fashion retail chain and affordable fashion or fast fashion, if you will, which is a bit more negative term. but anyway, yeah, that's what it is, and 90% of the business, roughly, they don't actually disclose the sales by brands, but 90% roughly is done by the H&M brand. So it's really what the name says mostly. But then you also have a number of other brands actually, of which COS is clearly the biggest. I think it's like 5% of the sales or so, and then there is a number of smaller brands, so it's 1 to 2% of the sales. There are quite many. I don't mention them all, but it's still, even if they are a small part of H&M, they have tens of stores in tens of different markets, so they are not that tiny. But in the context of the huge company, they are fairly small. And the business model is quite simply that they kind of design and order basically clothes from subcontractors in low-cost countries typically, and they don't really own any meaningful assets themselves. They lease the stores and lease the logistic hubs, and then they sell it through stores and obviously also through online nowadays, around 30%. So that's roughly it, I guess.
So it's quite capital-light business, excluding the leases.
Yep, definitely, yes.
Well, I think in the long term, H&M has been one of the greatest successes in the Swedish stock market. But if you look at the stock graph performance in the last few years, you can see there's been maybe some troubles. So what have been the main challenges in the business in the last few years?
Yeah, it's actually more than a few, I would say. So we have to go back to I think 2010. Then if I kind of frame the story a bit.
I was generous.
Yeah, they were. Yeah, H&M was really, I think they were probably the kind of some kind of first mover, and at least the best executioner of kind of the globalization of the fast fashion, and they kind of had a very efficient production chain, and they apparently had a very kind of good methods of expanding to new markets, and they did that very successfully during for decades already, but especially during the 90s and the first part of the new millennium. But and then in 2010 still their EBIT margin was 20 or over 20%. But then basically came the online competition, and that had two impacts to H&M. One is that brought price competition, and the way that H&M wanted to respond is that they really want to be competitive in prices all the time, and that led to a really long and unfortunately quite steady decline in the gross margins, which came from above 60% to around 50% now during the pandemics. And the other thing was that because H&M's model was really kind of optimized for this store network and kind of running the stuff through stores, they had to do quite a bit of changes and investments to change that to kind of an omni-channel model, which is now, and now it's definitely working as such, but that has unfortunately meant that the profitability has come permanently down from the 20%. It's not permanently in the like a few percent like it was during the pandemic times, which is of course another hit. So if you look at the past few years, it was the pandemics first, and then the Russian war annexing Russia, because Russia was a meaningful and profitable market for them. So those are the hits during the past few years, and also actually after the pandemics, the whole cost inflation and headwinds from that has affected the gross margin a bit, but if you look at the longer term, it's definitely kind of on a much lower level anyway going forward than it used to be some 10-15 years ago.
Well, I think H&M aims to fix at least some of these problems. So how are they going to fix the profitability problem, and do you believe how they are going to fix it?
Yeah, they are. I think on a quite good track already on that. So if of course the pandemic years are quite they were volatile and difficult, of course, to all fashion retailers and many other companies as well. But so that's not a maybe good comparison. But before the pandemics, they were doing like 7-8% EBIT margin, and now they are quite close to that already. If we look at the last 12 months. Figures, and they are aiming actually for 10% EBIT margin for next year, and then can kind of maintain that level. And I believe that's definitely achievable, because now all the cost headwinds are easing, and they are doing a restructuring program on their admin cost, and they have been able to push down the rents now. So that's helping us as well. And then, like I said, they do have now kind of the setup ready for the, or let's say it works well also cost efficiently for the omnichannel model, so that doesn't require any further investments or increased costs or so. So I believe that they are coming quite nicely around the 10% level, which is of course still much lower where they were before. So we shouldn't expect them to go back to like 15-20% what they were doing.
Does H&M have any sustainable competitive advantages? Looking at the margin profile, it looks like it doesn't have any competitive advantages anymore, and there's more bigger players like Inderes, which also looks it's much more efficient. So
yeah,
do they have any competitive advantages that last over time?
Yeah, probably against the biggest competitors. Not so much. Of course, if you look at the returns on capital, they are still very good, tens of %. So they are definitely, if they maintain even this profitability or get to 10%, the growth is definitely creating value. So that could suggest that they do have some edge at least. but yeah, compared to the biggest players, not that much probably. But compared to the kind of average fashion retailer, because it's of course huge and very fragmented market. Even H&M, being one of the biggest, has only a few % of the global market. So there's quite a few competitors out there. So compared to the average player, they have a global platform, a global very well known brand, and all that. So I would say that there is a, if not sustainable advantage, at least some very strong edge in the brand and the whole scale of their organization, but compared to Inditex, for example, I wouldn't say that there's any sustainable advantage.
What sort of growth do you expect in the long term? You said that H&M is like few % of the global market, so it might take some market share. But how big is the total market, and how fast does it grow?
Yeah, well, it's huge. I don't know, even remember now the numbers.
I think it's irrelevant.
It's big. It's big enough. Let's put it like that. But the growth is in developed markets. It's small, obviously. It's only like 1-2%, maybe the fashion market, for instance, in Europe, where H&M of course has originated and has still the majority of sales, but then in Asia it's growing a bit faster in the mid single digit, and then in Latin America where H&M is also expanding, it's growing actually double digits. So there is definitely room to grow both, increasing market share. I think especially outside Europe, H&M still has potential to grow market share in Europe and all the developing countries around the world. Definitely room to grow both market share and kind of enjoy the market growth. And their target is to actually double the sales by 2030 from a few years back. So that requires a quite good growth, like 7-8% per year on average. And
you believe in that target?
No, not that high. We are at around for next year. quite close to zero due to the fact that the economy is poor and they are still focusing on the margins. And then after that, we believe that they can do like 5% sustainably, which is still quite good and a bit higher than the global market average growth, meaning that they kind of, with their continued expansion, they are able to take market share. And I believe that then the brand and the company is strong enough to do that.
What are the main risks that that keeps you awake at night?
Well,
no such
luckily no such risk for H&M that would keep me awake. But the risk of obviously the kind of the margin track record and if the price competition is one key risk that could it be that will actually kind of light up again in the future, and one reason for another the margin go down again to like 5% what it was in the few years now. So that's obviously a big risk that they are not able to reach or maintain the 10% margin we are expecting. Then maybe a bit even larger team and longer term maybe is the kind of whole position of this affordable or fast fashion industry, which the EU is trying to address also, that the clothes actually be more durable and is this good for people and the environment and so on. But then that probably takes quite a while that something will happen there, and how will all that play out, I don't know, but that's definitely a risk where H&M needs to be awake and then adapt to whatever comes. But I believe that as they are the one of the leading players and with a strong brand, they should be able to adapt to the changes in the market. So that's, of course, it's a different story if the market kind of starts to decline, that people actually realize that we don't want to buy this much kind of clothes, which maybe are not that last that long, but I don't know if that will happen. But that's one risk definitely if we look a bit more out into the future.
I think we will touch that subject more in the future videos. The last question on this video: how do you look about the valuation?
Yeah, the valuation, if we look at this year's multiples, it's still fairly high. So we're talking about PEs like 25 and EBIT, I think, around 20 if you look at the reported numbers. Actually, in this case, it would be good to look without the lease liabilities, and they give also the EBIT without the kind of impact of IFRS 16. So you actually get that number. So that's a bit more useful. But then for next year, when we assume that they reach 9% EBIT margin, so closer to the levels which we believe is kind of sustainable, then it's only PE 16, and this EBIT adjusted for the leases is only around 12. So I think that's already quite moderate for a company which we believe that they will then kind of without any meaningful capital investments grow steadily 5% over time. And for example, Inderes is trading at PE 20 for next year, and then they have historically been very close typically. So H&M could be closer to that level. And if you consider the free cash flow or dividends, that they are basically debt free, so they can pay out, and they have been historically paying out all of their earnings in dividends. So the cash flow yield is like 4.5%, and dividend yields could be something similar, and adding 5% growth to that would kind of give you around 10% return. So that looks decent, not nothing stellar, but you're definitely above our return requirement.
Thanks, Rauli, for this interesting comments, and I urge you to read the whole report and follow H&M at Inderes.se. Thank you for watching the video. Make good. Thank you for blah 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 blah. Thank you for watching the video. Read analysis and make good stock picks.